Hello, everyone, and welcome to another Wall Street for Main Street podcast. Today, we have a new guest. His name's Bo Polny. He is a cyclical analyst. Bo Polny has had a publication for about over a year now. But he has some major clients like he just recently spoke at the Silver Summit with David Morgan. He's been doing this for 10 years. So, Bo, welcome to our show.
Thanks, John. I much appreciate you calling me up and requesting this interview, so thank you. Appreciate it.
Yeah. So what I first wanted to get into is that lately you've been speaking to a good number of conferences. I remember seeing you on Kitco. You've been to a lot of hard asset conferences lately. Let me pull up the most recent conferences you've been at. You've been to New York Metals and Minerals Conference, Seattle, Cambridge Summit, Silver Summit. That's actually I just mentioned. Vancouver, Cambridge House, and Hong Kong Mines and Money. What's the sentiment like at those conferences from what you've garnered up?
Well, that's a great question. You went to a few seminars, conferences last year, and you'd have 500, 1,000 plus people in the audience. And this time around, and this year, I would say it's probably 20% of that. So it's definitely down. That is exactly what you like to see in a bottom of a bear. Everybody's disinterested.
Yeah.
I call it the point of exhaustion.
Yeah, it definitely looks like everyone's completely exhausted. I see some people just throwing in the towels. And based upon your most recent forecast, obviously throwing in the towel right now would be a big mistake. So what do you see right now in the current gold cycle right now?
When I'm looking at the gold cycle, as you're saying, like currently, at some point a bottom has to come in, and at that point is called a point of exhaustion. I would say right now this would definitely be called a point of exhaustion. People have just thrown in the towel. They're burnt out, and they don't believe gold's going to rise or silver's going to rise. They believe the money printing is going to continue, and they're just going to keep holding the price down and suppression. And you have to look at the other side of the coin. When 3.5 years ago, when silver was at $49, no one thought you would ever see $15 silver. Everybody was talking $80, $100 silver. Remember those days?
Oh yeah, I remember.
And no one believed silver could possibly drop. It was an impossibility at the time, and so everybody was thinking inside the box. The box basically said it's going up. And cycles work outside of the box. And so when you look at a cycle, it doesn't matter that silver's at $49. It more matters is where is it silver relative to its historic cycle. And so when it hits a top, it basically runs out of time, and so the price has to reverse. For the same reason, when silver went to $15, at some point it has to run out of time, and the price must reverse. It doesn't matter that people think it's going to go to $8 or whatever they think is. When it runs out of time, the price has to reverse, and it has to go up. And it doesn't matter what anybody says. It doesn't matter what the Fed says. It doesn't matter. All the world events, all the world things that are about to happen or could happen, all tie into the cycle, and then they end up causing a reversal in price. Just like when it was at $1,900 gold, no one thought gold was ever going to go down. Everybody thought for sure $2,000, but what? 2,000 never came. Why didn't it come? Because the cycle was out of time. And so it reversed, and now we've had a down cycle, down to about 1130 on gold. And look at today. All of my subscribers, we were basically, I myself and all of my the subscriber information that went out over the past middle of this week was Tuesday, Wednesday, into Thursday, was to go long positions no later than yesterday's close. And, looking at the cycle daily counts indicated that we would have a nice move today. Well, today's pretty evident what happened. So that's really hopefully answers your question as to where we are in the current cycle on gold.
Okay. I definitely see that personally. Just looking at what's happening, you see mines. No primary silver miner can make money. Gold miners, I know a lot of them are shutting down. There's talks about closures and everything. And one other thing is you do gold. I have a question. Does silver generally, it seems to lead gold on the downside and the upside as well? And you actually started out with silver at first. Do you see silver, what do you see silver? Do you see it similar towards gold, or has silver bottomed first and gold might go down a little more in the future, or will silver lead gold and rise more? Because looking at the gold to silver ratio, which people generally follow, I don't particularly care for it, but it's way out of whack right now. So.
John, your point is well taken on the gold to silver ratio. So if we want to talk about that for a second, actually on my website, I actually on the Cambridge House, there's a logo of Cambridge House, and you can click on that logo. I think you looked at it earlier, and basically it talks about the gold to silver ratio. I kind of mentioned at the end there, but silver is a trade of choice now because of what you just said. It's the ratio. The ratio is way too high. And so silver now has a substantial amount of catch-up to do in terms of price relative to gold. If you look at silver was up 49, now it's down to 15. Gold went from 19 only going to 11 low 1130 or so. So that ratio is huge. The problem with silver and the good things about silver, in terms of a cycle work, I can't get into the details of it, but gold follows a 6-1 count, and silver follows a 5-2 count. They both add up to 7, but the point is, it takes silver less time to get to the top, and then it has more time to fall. But the key is, like you said, does get up to the top faster than gold, so it will hit a top before gold will coming up. When the top comes in, it's important to do the swap because there is we'll probably talk a little bit later about the equity market, but when the equity market cycle begins to collapse or fall, silver unfortunately is going to catch the wind of the equity markets and not collapse, but will not have the strength that gold will, because gold specifically is an inflationary hedge and a deflationary, it's a deflationary hedge, so it will rise as the equity markets are falling, more so than silver.
And this is all in the cycle, and you just recently mentioned the equity market. I know you've done the equity. You showed me something about the 21-year cycle. Would you be willing to just briefly explain that to our audience?
Well, when you look at cycles, you have to look at, you can look at short-term cycles, and I look at short-term cycles going back days and weeks, and then I look at long-term cycle going back years, 100 years, and even up to 1,000 years if you want to go that far. But the longer you go backwards, the bigger of a move and the big moves you can catch and see, versus if you just go back a few years or 5 or whatever years, you cannot visualize, you don't get enough data sets to take it to catch the big moves. So to answer your question, if you look at a long-term cycle, it will give you much more information about any big move that could be coming for any of the precious metals, and when it does happen to any of the precious metals, it'll be across the board.
Okay. And the last question I wanted to get into is, you were talking to me over the break in terms of your background, is that you're similar to Charles Nenner, where you were you started out as a doctor, and then you went into cycle analysts. And I was wondering, this is a two-part question, is Charles Nenner's a doctor, you're a doctor. Does being a doctor give you some sort of advantage into looking at cycles? Is it something scientific per se? And second one is, what do you use to determine? I know you did the 21-year cycle, so you determine history. Is there any type of technical analysis that you use?
So in terms of cycles, and when I went to school, what do you look at? You look at sine waves, and what's a sine wave? It means it has a high, a trough, but basically it's an up and down count, nothing more than a wave on an ocean. And if you look at an ocean, there's little waves, small waves, bigger waves, and there's tidal waves, tsunamis. Okay, so you have all different wave sizes. So then going back to time, if you take a tsunami, you only get a few tsunamis every 100 years, but you get small waves all the time, every day. And so, so over the years, I've looked at cycles, and going to school, I've just started studying. But it makes you detail oriented, I guess, would be the specifics of what makes it special. But to do cycle work, you have to be a good historian. You have to be able to find history, study history, be able to memorize different cycle points. Then you can use those as cross-reference points, for potential future cycle moves. And so, like, going back to the equity market, like we talked about the 21 cycle. A 21 cycle, and again, see, here's the thing about cycles. People think it's like, oh, how is that possible? It's not real, And when people make comments like that, what they're saying is they're making a comment about something they know nothing about. To say cycle is not possible, it's like saying there's fall, winter. Those are cycles. Okay, if there's cycles on a sine wave, that's a cycle too. And to think that life doesn't have a cycle is completely wrong. But to say that it doesn't, it means that you know nothing about what you're talking about. And also it creates a huge problem for the mindset. And the mindset specifically is we have free choice. We have free choice in life, and so how could there possibly be some rhythm to the markets? And the reality is that you have no free choice. The markets are set. It doesn't matter who says what happens. You can't change a cycle, and that's it. And so the free choice you have is, like I mentioned earlier, is to another interview was free choice is where you go to dinner. Free choice is if you're going to watch soccer or football. Free choice is if you're going to play golf. That's free choice. But as a collective, there is no free choice. And so you're stuck with the cycle work. And so going to the number 21, if you go to the website, you can click on that presentation that I did for the let me see where it was here. It's the Cambridge House Silver Summit. Just click on the box, and the 21-year cycle comes up. Now, all I can say about this 21-year cycle is just it goes back to 250-something years. So that's how long the data set is for this cycle. So my simple comment to anybody who says, how could that be possible, is very simple. You must assume that it's going to happen until proven otherwise. And so far, that cycle holds. And until proven different, there is going to be a equity correction because cycle work says it's coming. So I hope I've answered your question. Was there a part two to your question? What was the second part of your question?
I was just, do you use, I believe you answered some of it. Just do you use stuff like moving day averages?
Yeah, well,
or technical analysis?
See, here's the technical problem. Cycle work cycles precede all technicals. Okay, so what happened yesterday? I told my subscribers, everybody go on my turn dates who are on the trading cycles. We told everybody go long yesterday. Okay, so everybody went long yesterday. I spoke with David Morgan too, and we basically the instructions. Yesterday was a long go long and hold because there's a cycle that's coming that starts today. Basically, and it did. And gold's up like 30 or something bucks right now, and it's above 1180, which the 1180 broke and everybody freaked out. But I illustrated on another chart that it only broke in terms of U.S. dollars, not any other world currencies. So there's lots of support at 1180, and now that's already been superseded. So we're above 1180, and the cycle is up. And so it doesn't matter what anybody does right now. The cycle's up, okay? And so no matter what anybody says or does, or it's like playing against the cycle is like playing golf in a hurricane. And I think that's a good example. You put a golf ball down and you hit it with a driver. It doesn't matter how hard you hit it. There's a 200-300 mile an hour wind coming at you. It's coming back. The ball's coming back at you, and that's the example of trying to beat a cycle.
All right. Well, I just want to thank you for coming on for the time. So, and thank you for your time.
My pleasure.
We'd like to have you back on in the future. And I just wanted to mention that you have a free November 12th update for everyone that visits your webpage. I'll have a link below to this interview so they don't have to look for the website. But just in case, it's gold2020forecast.com. And if anyone wanted to find out more about you or anything else, or you want to add anything, feel free.
Yeah, on my webpage, if there's a couple, and I put some links up there. One's from all the way going back to the interview that I did in May in New York, basically stating a couple of simple facts. One, it was gold going to rise into early summer. It did. Gold was then going to drop into late summer. It did, and extended for another 6 extra weeks into here early November, and then it was going to finish with a amazing finish to the year. The year is not over, and so I got to tell you, we've got a cycle move, a minimum target of $2,000 on gold. Until this year's over and into next, we've got a cycle high next year. Specifically, the dates and time of these cycles, I give to my subscribers. But we have a minimum target of $2,000 on gold, either this year or next, the very, very latest. And there's a free update I put there dated November 12th on my webpage, and that gives you a little bit of details, a little more details in relating to gold and its price. And if there's any other questions, people can always send me an email.
Thank you for coming on.